All right, what's good, boys? This will be the first trade recap of our journey to a million in prop firm funds. So today is October 30th. I took one trade today on two different accounts. So I'm trading 250K accounts. If you guys didn't know that yet, I'm currently down about 250 on each of them. Yeah, so I took one trade today. It was a short. Obviously, I stopped out for 4 points and I took it at 847, almost 848, and then I got stopped out at about 851. So that is what we are going to talk about today. So let me take you through my pre-market plan real quick. All right, so price rejected a 1 hour supply zone overnight at 5888, and it was now trading in the 5860 to 70 area again. While this was happening, VIX found support at the 18.5 area. And so we had data coming out tomorrow, which is Thursday. So I wasn't expecting anything crazy to happen. I was honestly expecting a little bit of chop, but yeah, we did not get chop at all today. So let me show you guys what I did. So, all right, so this is what happened this week so far. So we had a gap from 842 to about 857. And yesterday we went down and we filled that gap before rallying up all the way to the supply area. All right, so I kind of made a mistake in my pre-market today, but this is what I was thinking. So I took this RBR you see on the 30-minute, and this was what I was using to play long above or short below today. I'll explain later on why, in hindsight, that was probably the wrong thing to do. But that was my level for today as I described to you in my plan. So let me go down to a 1 minute. All right, so we were using this level, 5860 to 5870. If we broke below it, I was focusing on shorts, and if we broke above it, I was focusing on longs. So, all right, so this is what happened today. All right, so we open up, selling volume hits the market. We test the open. We don't really make it too far up before selling volume hits it again. And then we get a nice sell-off. And this level right here, I did not have this marked out until after I was already stopped out of my trade and I realized what it was. But I'll explain that afterwards as well. So essentially, after we broke below this, all I was doing was looking for a good entry short. I got short right here at 847, almost 848. So yeah, my entry was short at 847, and I get stopped out at 851-ish right here. And you can see that. So yeah, you can see that right there. This is my entry. So let me show you guys why I decided to take this short. After we sold off, I was looking for a pop to get short on. So like I said, I was short at 847. Now this is VIX, and I had the prior day high and low marked out on VIX, right? So I was more biased short because VIX had been buying up. So we broke the prior day high at 840. And this is the 845 candle right here. As you can see, we rejected the prior day high. Now this is a bullish indication, right? But I did not see this at the time. I saw VIX basically around this area when I entered. So this entry was premature in a few different ways. And I'm going to try to show you guys on Bookmap what I was seeing as well. But yeah, so I took it short. This is when I'm just about to get stopped out, but I took it short right in here. So there's a few red flags in this trade, and the first one is being I am pretty much the first one to sell this move, which is never something you want to do when you're trading. So I entered at 847, almost 848, and as you can see, look at all the buying volume from 846 on. Here is where you see some selling volume, and this is about exactly where I entered right after this, but it is pretty much insignificant relative to how much buying we had seen prior to it, right? On top of that, there's absolutely no selling delta on the CVD down here. So what we can see at the low of day right here, we can see some larger size aggressive bubbles down here, and we can also see some absorption on the DOM. Another visualization is the CVD, and what you can see is we can see a CVD divergence happening when we break a new low of day right here, and then we have more selling come in. CVD makes a lower low while price makes a higher low, and this is a bullish indication alone. And then when you pair it with these two things, it all makes sense. So one, we were rejecting the prior day high on the VIX, which is a bullish indication. And then on top of that, all right, and then on top of that, we had this level right here, which I did not have marked out until after I was already stopped out and I kind of realized that it was there. So this is a long that I missed yesterday, but I just put it on because this is what I was kind of like demo trading, if you will, yesterday, but that's besides the fact. So this is just like a really nice RBR you can see that we saw yesterday after filling the gap. It's basically signifying that these buyers are true right here, and that this level moving forward would be a good point to use to test if buyers are still in control. So I did not have this zone marked out until after today in hindsight, but it is what it is. So my plan was kind of bad today, but at least I followed it and I didn't go against any of my rules. So I'm happy about that. But what I could have done better today is had this zone marked out for a gauge whether or not buyers were still in control. And then if I would have paired this level with the absorption and the CVD divergence down here, and then on top of that, if I would have paired those things with the VIX rejecting the prior day high, this is like 3 different confluences to get long at this level. And honestly, if not down here, because it would have been kind of hard, you would have had basically 4 minutes to catch this, which is kind of a nice amount of time. But if you didn't catch a long here, you could have caught a long right here. And the reason I say that is because usually when the market bids up very quickly like this and these buyers are not tested, as you can see, these buyers kind of got tested right here, but these buyers right here weren't really tested at all. And if I were to play this, it's not going to be very clear to see because my computer does not run Bookmap and screen record at the same time very well. But you would see, I can just show you on the chart, these buyers never get tested once. And usually whenever you see buyers not getting tested, especially after just like a little bit of consolidation, that is a good indication that the market is going to continue moving higher. So there were a lot of pieces to the puzzle today that actually pointed towards bullish. This level was kind of bad. And I mean, I can say that in hindsight, but I should have just used the same level I had been using, which was 70 to the 67 area. And then I actually would have seen us reject this level at open before testing these buyers down here from the prior day. And this possibly could have gave me a clear picture of what was happening, but hindsight's 2020 like always. So yeah, if I would have taken this long, I would have probably just targeted high a day and then have another target up here, which never even hit. So who knows what would have happened had I done something differently, but that's what happened today. So I hope you guys took those red flags in account and you can use them in your own trading. And yeah, I'll catch you guys in the next one.